Good morning, ladies and gentlemen. My name is Greg Michalowski from ForexLive.com. This is the Friday, September 9th, 2022 Forex Technical Report. Stay tuned. The dollar yen finally made a break to the downside. We did see 9 of 10 days move to the upside. Yesterday was an up day, and so was this day right here, where the market came off of its high price. So Wednesday came down, but still higher on the day. And yesterday, although the price moved up and down, the price did close higher. So 9 out of 10 days to the upside. But finally, we saw a crack to the downside, and that crack came after breaking back below this trend line. And the first attempt to get below the 100-hour moving average was quickly thwarted, but the price then, after moving back above the 100-hour moving average, moved back below that level, moving down toward the 38.2% retracement of the move up from the low before we did that 9 to 10 days to the upside here. So the bounce off of that level has now moved up to the 100-hour moving average of 142.84.3. So there's a battle going on between the 38.2% retracement and the 100-hour moving average. Some may argue that the dip buyers here against the 38.2% keep the bullish bias in play. I would have to agree. That's why we found dip buyers against that level. They may have put a stop below the 200-hour moving average. But if in order to move higher and to thwart this bounce off the 38.2, we need to get back above the 100-hour moving average, don't we? If we don't do that and we find sellers here, then what we do have, and we are seeing that, is we see the battle going on between the 38.2 and the 100-hour moving average. It's as simple as that. Traders are playing the technical levels, and so we're waiting for even the next shove. That's what we do in trading. But overall, it seems like 3 days to the downside here, but really only one. But we are seeing a little bit of a crack in the dollar versus yen, a little bit of switch toward the downside after the sharp run up that we've seen through here. Looking at the daily chart, by the way, we did this trend line here. We broke it a few days ago, moving sharply to the upside. We moved back down toward it here. So there is some apprehension getting below that trend, back below that trend line here. So be aware. It's a support level. We need to get below it in order to increase the bearish buys. But watch the 100-hour moving average. Let's take a look at the euro versus US dollar, and this also saw a crack to the upside. Recall from yesterday, we moved lower here. This was on the ECB sources comment that 75 basis points was still in play for the October, or should be discussed. We fell below the broken trend line here, and also below the 100-hour moving average. But as you can see, the market quickly rebounded, and we moved back up to the 200-hour moving average. We spent the next couple hours waffling back and forth between the 200 and the 100-hour moving average, finding support against that old broken trend line and the 100-hour moving average, and that gave the nudge to the upside toward the end of the U.S. session. That momentum continued into the Asian session, moving above this swing area through here, and also above the 38.2% retracement of the move down from the high over here to the low right here. So that was all positive. And where do we go? We moved all the way up, and we stalled at the 50% of the same move down from this high to this low right here, and we found sellers against that level. Of significance in this yellow area here as well was, if we go back, I'm going to put this on the 4-hour chart, and if we look at this up and down swing area through here, this was about 18 days of trading, and the market stayed within this range here over that 18 days. When we moved back to the lower end, lower extreme of that trading range, and we did find sellers. Also, with this 4-hour chart, we can see that the 200 bar moving average on the 4-hour chart is also in that area. So 50% 200 bar swing area stalled the top side. I'll go back to the hourly. Not surprised. Again, risk can be defined and limited against this area, and the market has come off. Now we come off to another, back to the old swing area here between 10022 and 100.32. So we're going to need to get below that area in order to decrease the bearish bias, or we find the dip buyers against this area and look for a rotation back to the upside now that the market has corrected off of the key resistance area. So like the euro versus US dollar trading, or like the US dollar versus yen, the euro versus US dollar is trading the technicals, and pretty standard stuff here. Sellers against 50%, buyers through resistance, and we're come back down to the swing area here. That's how the technicals set up for that currency pair. Let's take a look at the sterling versus U.S. dollar, and like the dollar versus yen, and the euro versus U.S. dollar for that matter, we did see some technical breaks on the upside here. We saw a move back above the 100-hour moving average, lots of up and down volatility around it over the last couple of days, and that led to a number of different bars here to the upside here. Maybe we had one bar that came down through this whole range through here, but all the hourly bars moved higher, breaking above the 200-hour moving average for the first time since this day right here, and that was quickly rejected. This time it wasn't. The market moved above it, came back down to it, and based off of it moving up. Again, we moved up toward the 50% retracement of this move down from the August 26th high down to the low that we saw on September 7th. The market stalled ahead of that key swing level. Also, we have this area through here where we had a swing low, which was just below the 50%, and swing lows here, swing low here, swing lows through here, swing highs through here. So a lot of reasons why the market found willing sellers against 50%, like some of our other pairs moving back toward a technical break level. That is a 200-hour moving average at 1.1556, and we are finding some buyers sniffing against that level. Need to get back above the 38.2% retracement before moving below the 200-hour moving average. So that's the levels now for the sterling versus U.S. dollar. We'll see if that plays out. The dollar Canada, we had a little bit weaker than expected data. We saw the unemployment rate move higher, which is can be sometimes good, and the jobs the employment change was negative versus positive 15 expected. So we are seeing the dollar versus Canada move back to the upside. On the way to the downside here, which was started on Wednesday's trade, we did find sellers against the high from last week, and we had other highs this week here on Wednesday. In trading yesterday, we came down and traded above and below the 100, 200, but closed lower into yesterday and into this swing area. If I put it on the 4-hour chart and we take a look at what defines this yellow area through here, we had a swing high, swing high, swing high, swing high, swing low through here on the break to the upside, and then broke back down to the downside and had that swing used it as a resistance level, and then came back, tested it here, traded above and below it through this period right here, but then found support against it last week, and this week also again found support. So breaking below that level was the go ahead to move to the downside, and breaking below the 50% of this last move to the upside also had it added to the negative bias. If I go back here and move the Fibonacci down to this low right here, the price is approaching the 50% retracement, or was approaching it at 129.67, but found early buyers. Watch the this level at 130.51. I'll go back to the hourly chart, and the other levels to watch is the swing area. We can't go back above that swing area. We left it. We moved above it, and now we can't go back above it if the sellers are going to remain in control. So there you have it, some of the major currency pairs as we head into this Friday trading. My name is Greg Michalowski. Good fortune with your trading today. Bye-bye now.